In today's video, we're going to have a quick look at the Buffett indicator. We're also going to be looking at what's going on in Hong Kong with a little bit of an update on the situation both from the US side of things, the UK side of things, and what we might be anticipating later today. Hello and welcome to another ACY Securities Market Update. My name is Alistair Schultz and I'm going to be your host for today's trading journey. The first thing to have a look at is that the Buffett indicator is in an overbought scenario. This indicator is not really called the Buffett indicator, it's just been termed as a useful point that Buffett made many years ago. So naturally, it's kind of gotten a little bit of a nickname as the Buffett indicator. But the reality of it is the Wilshire 5000 to nominal GDP index. Now, what we're really seeing here is that each time it goes into a higher point, we can consider that the stocks are overbought. And there are a number of these type of indexes available to have a look at. The next one is what we call the original Buffett indicator. So this is what Warren Buffett genuinely looks at. It is a market value of equities outstanding to the nominal GDP. They are a little bit different, as you can see from me switching back and forth here, but they do offer some slightly different advantages. On the Wilshire 5000, it's obvious that it gives all of the largest market cap businesses in the US, the top 5,000 if you will. So it does give a really good reflection of what things are worth. In the market value of equities outstanding, it provides a lot more data. It goes back to about 1947. So that enables us to have a look at a much longer duration of history, and it does reflect movements in price a little bit more erratically. So you can see in 1999 and 2007 where prices got a little bit of a jump occurring. To put all of these into perspective, even though Warren looks at the original Buffett indicator here and the previous one being the Wilshire 5000, we also have the Dow version. Now naturally the Dow version only offers the top 30 sort of industrial stocks in the US, but it is still relevant no matter what, because you can actually see that there are some similarities between these charts. The Dow to GDP looks inherently similar to the Buffett indicator that we use today. The original Buffett indicator looks very similar to the S&P 500 version. So you can see where we're getting a little bit of difference in data, but it is also giving you some pretty good examples of why price might be unvaluable at the moment, or at least that's what Warren Buffett says when he sees that stocks are not in valuable positions. So in the S&P 500 version, we have it at its all-time high. In the Dow version, it's at its all-time high. In the original Buffett indicator, it's not quite its all-time high, but it's damn near close to it. And we've also can see in the other Buffett indicator, or the new Buffett indicator, that it is also at an all-time high. So if this is what we're seeing on these sort of charts, and this is something that Warren Buffett follows quite closely, is that perhaps stocks are overvalued. And there is an obvious signal of that. We are seeing stock markets dislocate from the rest of the economy, likely to be basically induced because of helicopter money or the idea of stimulus propping up stock markets. So hopefully we do see some changes coming around that and a little bit more continuity on what is actually going on. We will start to see, hopefully, that things start to line up a little bit better as opposed to there being such a major disconnect and that disparity between what we're really feeling and seeing. Now, moving on for the day, we've got an executive order from Trump that has been signed that limits the liability protections of social media enterprises. This is all based on him getting fact-checked on Twitter at least twice. So it does feel like a little bit of a tantrum, and he's trying to go all his way on it, but unfortunately for the president, it goes against the First Amendment, which is really about freedoms of speech. So reality being here and being fact-checked is that it's probably not going to work too well, considering A, it's a private company, and B, it's First Amendment rights. You are always going to have issues with that when it comes to the idea of trying to close against. It's the whole reason that the US gun market has never been able to go under. Now, moving on from that, we've also got some updates about Hong Kong. It is expected today that we will be having an announcement, likely from President Trump, on the matters of announcements towards China policies. And this is all going to be is a little bit in reactionary to what the Hong Kong situation is right now and the national security law. In addition to that, and this is a new one, is that we've heard from the UK. We've had a minister from the UK basically say that they're going to offer citizenship to Hong Kong residents if they would like to come over and live there instead. So not only are we now looking at the idea of seeing businesses and flight risks from that side of things, capital flight, we're now actually possibly going to see citizen flight. In which case, all of a sudden, if we have both of those entities come out, you've got an island that's not really going to be too valuable to you. Now, the biggest question that's really going to come out of these announcements that are coming today from the US is how are they actually going to deal with it? We know that they've declared that Hong Kong does not maintain any autonomy. So there are a number of issues that I said that they could, or places that they could target, one being tariffs, the next one being really about the visa side of things and Chinese sanctions there. And we could even see that special trade status being removed. So they are really the big three things that I'm really going to keep an eye on. And when it comes to the US side, naturally, the worst case scenario is if they decide to put all three in place, in which case you would immediately see capital flight starting to occur. Even though it hasn't started yet, you will no doubt see it, because there's going to be a whole change around the Hong Kong legal system and how you can conduct business there. Now, moving on from that, the other piece I've got for you today is really about Japan. Japan didn't go into a heavy stated lockdown. They did lock down small areas, but largely the economy remained on track. Unfortunately, though, they have seen the largest amount of bankruptcies in 7 years. Now, if this is anything to go by, if we look back in the early 90s when we had quantitative easing starting to occur, then since then, Japan has really been stuck in this constant state of having to stimulate the economy. And we're looking at them as a bit of a model on what might happen now if we are to maintain quantitative easing across much of the world, in Europe, in the US, Australia, New Zealand, you name it, pretty much everywhere is putting some level of a stimulus package together. Now, unfortunately, for the Japan situation is that they were never able to go back from it. They struggled with inflation, and right now, the rest of the world is doing so as well. So we're hoping that the model that we see in Japan isn't going to impact the rest of the globe in the same way, but it is going to be challenging to see. And considering the economy in the world that really didn't have a lockdown and kind of went on with business as usual to a certain degree, has also got the highest number of bankruptcies in 7 years. So that is definitely going to be something we're all going to want to keep an eye on to see how it might transpire in our own homelands. And in today, in the news ahead, we have obviously these announcements coming out from Trump and potentially the US about what they're going to be doing about the current Hong Kong situation and what some of those sanctions and policies or changes might look like for China. In addition to that, there's also Canadian GDP figures coming out later tonight. But in reality, I think the announcements that are tentative on the Trump side are going to be the big ones to watch for. Now, if there's anything from today's video that you liked or you want to get in contact with me about, please feel free to shoot me an email at talktoal@acy.com. And of course, don't forget to like and subscribe this video for more great ACY Securities content. Now, in addition to all of that content, you might be able to see me every Tuesday at 9:40 a.m. on the drop on AusBiz TV. So please, have a great trading day ahead, and I look forward to seeing you next time.